What is going on, traders? Welcome back to Atlas Options channel. In this video we'll talk about the ascending triangle chart pattern and how to use it in trading. The ascending triangle pattern is a popular technical analysis tool used by traders to identify bullish opportunities in the market. It is considered a reliable pattern as it has a high probability of continuing in the direction of the trend. The pattern is formed when the price of an asset forms a horizontal resistance level that is repeatedly tested, while the lows of the asset continue to rise, forming an ascending trend line. This creates a triangle pattern, hence the name ascending triangle. The pattern indicates that the buyers are becoming increasingly aggressive, and they are willing to buy at higher prices, while the sellers struggle to push the price lower. The horizontal resistance level shows that there is a price point, beyond which sellers are unable to push the price lower, while the ascending trend line shows that buyers are continually entering the market, driving prices higher. To identify the ascending triangle pattern, traders should look for at least 2 or 3 touches on the horizontal resistance level, and an increase in trading volume as the price approaches the resistance level. Confirmation of the pattern provides traders with a higher level of confidence in their analysis, and increases the probability of a successful trade. Once the pattern has been identified, traders can enter the market by buying when the price breaks above the horizontal resistance level, with a stop loss placed below the last swing low. This strategy allows traders to benefit from the bullish momentum of the market, while minimizing their risk by placing a stop loss below the previous low. To determine the potential price target, traders should measure the height of the triangle from the highest point to the horizontal resistance level, and add this value to the breakout point. This provides an estimated price target for the asset, which traders can use to set their profit targets. It is important to note that as with any trading strategy, managing risk is critical to success. Traders should use appropriate position sizing, set stop losses and take profits, and adjust their trade if necessary based on changes in market conditions. Now you know how to spot the ascending triangle pattern on the chart, and how to trade it. To solidify your knowledge, go through the charts, try to find this pattern, and see how the price action played out. This practical exercise will definitely improve your trading skills. If you find this material useful, please give it a like, make sure you get subscribed, hit notification bell to stay up to date. Also make sure you check out the links in description to support the channel. And I'll catch you in the next one. Take care.